We're going. So we're joined by Coinflipcanada. Welcome back, everyone, and thank you for joining us from the GMX camp. Quite obviously, quite obvious if anyone follows any of our feeds or what we do at Blockmates, we're extreme champions of GMX. So really, really happy to have you on. Thank you very much for coming on. I understand everything's hectic at the minute, so thanks for taking the time out.
No, my pleasure. We're big fans as well.
Oh, that's very kind of you. Very kind of you. So just let's just do a couple of brief intros. So day to day, how does your day look like? What's your kind of role at GMX? And I can imagine every day is completely different because this space is quite chaotic. But yeah, what's that look like?
Yeah. So my role within GMX, basically, part of the GMX community, sort of part of the core team that's been involved, in moving the protocol forward. I spend my time more on, partnerships, community relationships, just helping to take the protocol and share it with as many people as possible, in every aspect. So my typical day involves a lot of phone calls with, people who might be, holders of GLP or GMX, people even looking at doing that. And the bulk tends to be with other protocols. So, a lot of protocols on Arbitrum, Avalanche, who are entering that ecosystem, making sure that, we're able to highlight, what GMX is doing, how we think we can work with other people, and, how we're hopefully building something that, people enjoy trading on, something that is productive for people to provide liquidity on, and it's a bit of a building block for a lot of other things that are happening in DeFi now. So that's a typical day.
Well, from my perspective, you're doing an extremely good job on that front. The community seems to have been kind of vested in a way that those guys are. So there's kind of two community types that you get. There's the really nice kind of welcoming community in crypto and DeFi, and then you kind of get the really harsh and aggressive communities. And GMX has got one of the best communities out there. I don't just say that as full disclosure, complete GMX maxi here, but what you guys have kind of fested and harnesses over there, that's absolutely people would pay an awful lot of money to get that. So is that been difficult, or has that been kind of quite a passive approach?
Well, I think it's come hold for a few different reasons. One definitely is our lead developer X, who has been very, very active, and to a great extent, a lot of protocols talk about being community owned and community led. For us, that's not talk. I mean, literally every part of this, whatever funds may have been there, the community was the ones who decided to sort of dedicate towards what should be done in the protocol, the direction that the protocol has moved, even where we're now moving forward as we iterate as the platforms is being iterated. It's all been sort of driven from there. And I think what's been great is that there's been this sense that, your voice has value and what you say is important, which has actually created a very sensible community. So, while everybody are, there's huge fans of GMX, they are all, compared to a lot of protocols, you don't get a lot of that, when token go up and, when this and when that. You get a lot of people saying, hey, so, why should we add a new token to the liquidity pool? Why should we not? What is it that we can do in the future? How can we work with others? It's been a wonderful experience, and what's been the best part of it is that, as our team has grown, or there's been more contributors, those contributors have all come from the community. I mean, we, in some ways, we have, not that many people who are working away on the protocol, but we have such a deep bench of people who have been able to contribute and as the opportunities come up, more and more are able to contribute. Our biggest unsung heroes is our mod team. I mean, our moderator team. I don't think money could buy it. I mean, they're just at the next level. I mean, they sort of steward that community along with great ease, I should say they make it look easy. I know behind the scenes quite often, but they they fully understand that it's not an easy protocol to understand. I mean, something as complicated as what GMX has built, but you get people who really don't know how it works, and it's just important that you help everybody along. And so I think it's it's been a great, it really is a cornerstone of what the protocol is.
Yeah, you're completely right. If you get a good mod team behind you, they are the kind of unsung heroes of successful projects. Completely agree with that. They just the day to day kind of, those kind of repetitive questions that you get asked in the Discord, Telegram, and all that jazz. They probably get a little bit annoyed on the back end, but having a happy face and keeping that community ethos going and everything like that, it is as you said, complete unsung heroes of any project. And you guys have just done some like all sorts of different stuff, and I can kind of see that a lot of this has been completely community led. You've got like the Blueberry podcast just spun up. You've got Blueberry Club NFTs, which are excellent. You've got this new referral system as well. So can we just get into that and how people could actually be earning off the back of that as well, if they're kind of using the platform already, if they have an understanding, if they know other people that can use that? Is this been doing well for you? It looks pretty well by these numbers.
Yeah, I mean, I think the referral program has been a wonderful proof of concept and has now continued to grow in terms of, its reach. And I think a big part of it was not even something that we put a lot of effort behind getting a whole bunch of people to be referrers or anything like. We just started by making sure it was a tool available so that in a very transparent manner, it's all of that information is available on chain. People have built out dashboards so that people can see what's happening with the referrals. I think it sort of just fed into the way that GMX has worked, which is that, we just try to make sure that the product works well and the product works transparently. And so, it's been a great way to allow community members, content creators, anybody who wants to project their voice to be able to share, share their referral codes, allow a rebate for traders, and also to to earn somewhat from the growth of the platform. Because in the end, as a platform, we do know that bringing new traders into the platform is something of value, and it's being rewarded just the way that we reward liquidity providers and stakers and everybody else. Everybody who's working towards the growth of the protocol should be compensated in some fashion. And as with everything else we do, we try to do it within using ETH, AVAX, just try to really do it based on actual fund flows from the protocol that the protocol itself is actually earning. And I think that's been a really big part. We've had people who have said that we've never done referral codes before, but we just love the community. So they're putting out their referral codes. We know some of them are donating their proceeds. People are doing lots of different things, and we've had people who only work with centralized exchanges saying, I never imagined the day would come where I could do something like this, with a decentralized exchange. But it's also not that it's whatever I'm getting is, people will know it's transparent. I'm not hiding it. It really fits with the ethos of DeFi.
Yeah, I completely agree. I mean, we're at the stage now where we're going to be releasing. It's currently a weekly newsletter, but we're trying to get one of our writers to take it up 5 days a week, and this is going to be one of our mainstays as just to break it up with a little bit of unpaid sponsor, but a little bit of kickback to get one of our main writers some funds if it comes through. And it's just, as I say, it's a very mutualistic kind of setup where if we're including it 5 days a week in a newsletter and people are clicking through, and we can talk about the benefits in the articles that we've released and what we like to cover GMX in the majority of our streams and in our community Discord and things like that. If people click through, obviously that works in a mutual benefit for both of us. So I think it's a great incentive. And obviously some of these people seem to do it extremely well. Some guys nearly had like 12 grand in payouts, which is good going, whoever that is. But as you were just touching on before we got to the more community aspect, every project that I seem to be following seems to be wanting to dip their toes or have some kind of composability into GMX. A lot of projects are really picking up the kind of GLP strategy at the minute. So how is that evolving? Has that been a slow burn, or have people just been trying to figure it out on the back end? Because you've seen the likes of the Umami guys and things like that integrating their GLP hedging strategy, which is fantastic. Is that net positive for you guys?
Absolutely. I mean, I think from our standpoint, there's two aspects to it. One, which is that, I think that both on Arbitrum and Avalanche, on Avalanche, we're the largest perpetuals platform. And on Arbitrum, we're the largest perpetuals platform and the largest protocol on the entire chain. So we sort of take that as a bit of a responsibility that we really try to reach out to everybody who's in the ecosystem and say, what can we do to work together so that a bit of what we've tried to build around us can also help support others in the ecosystem. And building off of GLP is definitely one of those areas that we've been working on. It's taken time because I think that I'm trying to think of the best way to put it. I mean, our conversations with Umami started months ago. There was actually a governance proposal that was put up to our community, and we even did a small token swap with them. Again, just to help support them to be able to kickstart that effort.
Mm-hmm.
And so, yeah, I mean, for example, Umami starting their Delta Neutral Vault. I know of at least 2 other players who are looking at different versions of Delta Neutral Vaults that they want to build over top of GLP. More Money recently launched on Avalanche GLP as collateral, working off of a vault that Yield Yak had built actually a few months ago, but had not initially gotten much traction, but is now continuing to build up. And yeah, I think one of the biggest things that played out was the recent market downturn. We went through over, between, I don't know when it started, May, June into July, probably one of the most consistent and severe downturns, consistently moving the market down. And the reason I make the point that extended period meant there was a lot of opportunities for people to trade against the pool, to take positions, to do a lot of things that could compound the effect of a downturn. And GLP performed admirably well through that entire period, and I think it really showed people the resilience in the way that the platform has been designed, especially during these sort of market drawdowns. And it's given a lot more comfort that if you're going to use a collateral, using something like GLP that has a nice diversified basket and a lot of mechanisms that tend to diversify its trading exposure, it's an interesting component. But I think the other piece that we're very excited about, and I think you'll see this in the coming months, is a lot of protocols utilizing the capital efficiency of trading on GMX on chain as part of a hedging strategy for their vaults. And I think that's where we continue to work with a lot of them to find the right way to fine tune it. In the end, they're not retail traders who are looking at punting a position on a directional basis because they're trying to speculate on the market. They're trying to basically hedge positions that may arise over time and do that on a consistent basis. And for protocols like that, we really want to work to figure out a solution so that we can just be a nice reliable base layer for them, and do that again, as we said, on chain without needing to have people dedicate a lot of capital to being able to deploy those strategies. And it's what's been really trying to see the right word. What's been really great to see is people who have been basically market makers and others who've been following strategies like this and have been doing it with centralized exchanges, a little bit within DeFi, and these are private books. You're getting other DeFi protocols building these strategies on chain and doing it transparently, where normal retail DeFi users can now benefit from all these strategies, right? And do so in a way, again, that is composable, on-chain, transparent. And I think that's something that we find really exciting.
I completely agree. Just having the GLP as like the base layer and seeing all these different protocols come and use it in new and inventive ways, it must be great for you guys to see on the back end. But we were speaking to the Hero guys at Hero Network. They're building on-chain primitive on Solana, and they were saying something to the effect of what you've just said. It's like you want retail to be able to gain exposure to you don't want it to be asymmetrical in the sense where if you've got large players that are coming into the protocol, you don't want the vast majority of returns to go to those. You want this kind of nice symmetry between retail can participate, but if we're completely honest, the large amount of your volume on your platform is not going to come from retail. It's going to come from those big movers who, as you say, are hedging the positions. It's where you're going to get your volumes, it's where you're going to get the high notionals and things like that. So I completely agree, and I can only see more and more people coming onto the platform and using it in that way. I think hedging and using perhaps in a responsible way are probably a little bit overlooked in this space, and I think it's something that we're going to try and highlight and try and calm people down a little bit instead of trying to go 100x leverage long and things like that, because they can be extremely useful, particularly, I mean, everyone's getting chopped up in the market left, right, and center at the minute. So it's the platforms like GMX could be a perfect hedging strategy if people know how to do it. So I think in the coming weeks, we'll try and get you some basic guides out there to show how that can be actually used. And people don't have to sell the position if they don't like pressing the red button, but they can go ahead and jump onto GMX and hedge that position. So you're kind of delta neutral and things like that. So we'll make sure we try and inform as much as physically possible. And obviously you guys are doing as much as you can. So in saying that, this release of the 50 billion trading volume, that's not small money. So you guys are really beginning to get that uptick at the minute. When did you start seeing that, like the kind of parabolic rise on volume? Is it been a recent thing?
It's actually a really interesting thing. That in reality, I would tell you that our volumes today are not necessarily dramatically higher than they were a few months ago. The difference is that if I denominate all of that volume in native tokens, we've continued to be growing market share. So, both in terms of overall market share within the perpetual space, we continue to be growing. Within native tokens, we continue to be growing. And I think the very interesting aspect is that whenever we've been able to increase liquidity, trading volume has followed. It doesn't necessarily follow the very next day, but shortly after, we've continued to find trading volumes continue to grow, because the larger we get, the more the platform becomes the first look for a lot of people to trade. And I think that's one of those interesting aspects where liquidity is very important. And even when the concept around GLP, which was as opposed to working with segmented liquidity, we've done this large pool liquidity. It's been a very big part of that. I would say the overall success within GLP. We are going to be doing some different takes on that going forward, a mixture of pools and pairs to be able to isolate risk and the like, because different liquidity providers have different risk profiles. But no, I mean, I think from our standpoint, it's been one of these. It's been a slow burn. We constantly see the growth. And it's not, that suddenly something changed one day and everything just started growing. It's been this nice, healthy increase. We're able to consistently see more and more daily active users or weekly active users, which we tend to track. We've been seeing, more and more people contributing into liquidity. And we've been seeing, as we said, a lot more range of traders. I mean, there used to be a point where we just simply got people who are just trading long within basically BTC and ETH. And we don't have a lot of other tokens, to be fair. We really work very safely and securely in a limited range today. But, we've been seeing a lot more variety of traders. We're seeing a lot more short activity. We're seeing those traders come out. And I think that's all been very positive.
100%. I think certain projects, when they do hit that kind of middle of the S curve, and it's just like stuff happens an awful lot too quick for them, and obviously that's when people start coming in and questions start getting asked and things like that. So it's been a joy to watch from the beginning, and you're starting to see an awful lot more people being vocal, who quite big names. I mean, you've got Arthur Hayes, who's being quite vocal all over Twitter and things about that. So right people are talking about it. The community is very, very strong. The product's absolutely brilliant, and the trading experience, if anyone hasn't tried it, it's as seamless as you get. It really is. I don't just say that to be kind of, I don't know. I don't say that just because I'm a GMX holder. If it's funny to disclose that, it is a complete seamless experience. And as you said, I think that'll only grow. As more people come onto the platform, more people begin to grow out with the platform. What would the risk be of bringing in additional tokens? We just touched upon there is a small basket of assets that you can trade, but where are the kind of immediate risks on kind of more exotic tokens coming onto the platform?
Okay, so I would say the risks come in a few different areas. One, which is that, in the current model with us working with a basket of liquidity, if there were tokens that liquidity providers were very unhappy to have exposure to, because in the end with GLP, as opposed to a lot of platforms where liquidity providers effectively kind of keep some sort of an exposure to effectively a stable coin, and then then they're dealing with sort of directional moves based on what traders might be doing. On a platform like GMX, you are still taking exposure to those assets if you're a liquidity provider in GLP. And in that context, I think, people desiring that exposure is one aspect. And I think the other one is that if you end up with tokens which have low liquidity, there are some inherent risks with an Oracle-based model where you're replicating larger markets that people could try to manage or manipulate or move those markets, and it would be a lot easier for them to do that. So to use an example, for somebody to move the BTC or ETH market would require a level of resources that I would say probably means if they can move those markets opportunistically, GMX is nothing. I mean, we're very proud of what we've built, but in the scale, we are still a portion of the market. We are not the market. But if we were to say list a token with $1 million of daily trading volume or something, it would be very easy for somebody to potentially move those markets or do so in a way that they could opportunistically take advantage of the wide open liquidity that our liquidity providers are providing in GLP. Because we've created a platform where retail is able to be a liquidity provider and is able to backstop all trades on the platform, and really just make sure that if you'd like to take a leverage trade, if you'd like to hedge, that liquidity will be available. So yeah, for that reason, we tend to focus on tokens that we feel the most comfortable with. We will in our next iteration of GMX that we've been working on, our synth platform, we will definitely be able to list a lot more tokens, both potentially on an isolated basis for those markets, or even on in some cases within pools, because I think we're trying to introduce more mechanisms that while being Oracle based, naturally create a lot more of a balanced market. Right now, we do have a directional exposure that does come up from people taking longs and shorts. We believe that by and large works to the benefit of passive liquidity providers because, effectively you're taking you're being the most patient capital, and we do believe there's a great benefit to being patient capital. And history has so far shown that to be the case based on trader P&L on GMX. But we do think there's ways to optimize that experience to balance out some of that long-short exposure and do that with even tokens with a little less liquidity than the ones we're working with today.
Okay, that makes an awful lot of sense. So just if anyone's kind of listening and they don't have a full understanding of the basic overview of the GLP, how can we best describe it to someone who hasn't actually experienced on the platform?
So GLP is a pool of, roughly speaking, 50%, I would say, blue chip crypto assets. To use an example, on Arbitrum, that would be BTC, ETH, Uni, and Link, and 50% a basket of stable coins. Again, leading stable coins. USDC, USDT, Frax, DAI, apologies. And on Avalanche, a very similar pool composition, but using, for example, ETH, BTC, and AVOX. And so effectively, you end up with a portfolio. So holding GLP itself, you end up with a diversified portfolio, but it's a portfolio that also, in addition to giving you that diversified exposure, also underpins all trading on the GMX platform. So, the presence of those tokens allow us to ensure there's complete backing of all trades executed on GMX. So, a liquidity provider actually on GMX can never get liquidated. You're never exposed to tail risk the way it's configured today, because if somebody decides to go long on BTC, there is BTC sitting in that liquidity pool. If somebody wants to short the market, there are stable coins to settle those positions. We're able to settle on a very conservative basis all trades that are executed on GMX. But with the leverage trading, we're able to do a very consistent turnover. Usually anywhere between 50 to 100% of the assets available in GLP turn over on a daily basis, which is a level of volume and activity that far exceeds almost, on a consistent basis, I would say exceeds all but the most extreme concentrated liquidity pools that you might find on Uniswap. You will not find that sort of risk reward balance a pool like that elsewhere, at least that we've been able to find on chain. So, if you're a GLP holder, you effectively earn from, people borrowing those assets from the pool, from people paying those swap fees, and having all of those, while maintaining, a crypto exposure, which we find, most of our liquidity providers do like. And very soon, I think, as you had mentioned, there's a lot of delta neutral vaults that people are building for people who don't want to even have a crypto exposure, who really do want to have more of a stable coin exposure while continuing to earn from the healthy yield that GLP has delivered. I mean, we've varied from anywhere from 50% down to the mid 20s over the last number of months, and that's been very consistent. Slight variations depending on market volatility, but consistently healthy returns.
Yeah, I think it's a great product, and I think you're beginning to see an awful lot of projects out there that their tokenomic model might have worked when everything's green and everything goes up, but you guys have really cracked something here, I believe, and there's an awful lot of projects, not just looking at the GLP structure, which, I mean, that for me is a perfect product. I can go and deposit stables, I can go and deposit BTC, ETH, I can gain exposure. I mean, on AVEX at the minute, 36.13%, 24.77% of that's paid out in AVAX, and then the remaining is paid out in escrow GMX. So then you're gaining directional exposure to the basket of underlying assets, but because of the stables in there, you've kind of got a muted volatility position, as few people like to describe it. So it's just a set and forget, isn't it? It's if you're, as you say, if you're with patient capital and you want to just deposit in there and that really, really handsome yield and sustainable yield, that's organic and coming from activity on the platform, people should just check it out. And if they're struggling with understanding it, we do have a full guide on that on blocmates.com. They can go to that, or they can jump in the GMX Discord or Telegram. I'm sure people will be happy to help them out in there, or equally if they're already in our Discord, then we're more than happy to talk them through it. So let's have a look at GMX. Do you have any final points on that?
Well, no, I think one of the other things I was going to mention is that, I think for anybody who wants to just, sort of dig in a little bit more, obviously, there's wonderful content that you guys have put out, but also on our website, if you just go to our stats page, there's a lot of, we really try to make all the information available. So, you can compare on, from the dashboard, you can go to stats.gmx.io and you can look at, relative performance of GMX versus, other liquidity pool tokens versus just that basket of assets being held. And by the way, that basket of assets is kind of, the sort of basket a lot of people would have. Okay, I have some stable coins and I do have ETH and BTC. Maybe I want to own a little more ETH and BTC. Maybe I don't. If you're okay having a bit of a diversified portfolio, it's you can look at those comparisons, and I think as always, past performance is no predictor of future, but I think it definitely can help guide you to understand how GLP has performed, in various market conditions.
Yeah, this is a great chart. Yeah, they really, really are. Was this all community built, or did you guys build this?
So a mixture. We've had community members who did help to assemble some of the data, and then it's been aggregated. You're also Dune dashboards have now come over to Arbitrum and Avalanche, and we know there's already some wonderful community-based Dune dashboards. And there's obviously, if you go to our ecosystem page, there's a lot of different explorers where people have assembled a lot of community-based information. So given a choice, we really do love it when even the wider aspects of the community jump in and start to aggregate this information, because I think you mentioned it very early on. It's a very friendly community, but it's also it's a community very much based on looking at DeFi, looking at how the protocols work, taking that information, sharing that information, which has been great. So for example, we show you where we share who all the biggest swappers are on the platform. We're looking, you can look and you can see, if trading volumes are coming from existing traders and new traders. You can see, obviously volume and where that volume is coming from all the different uses that the GMX platform has.
Yeah, it's a great kind of bird's eye view of the platform. Obviously, those new users are just completely open to the right, which is always a good sign as well. A
Yeah.
lot of other protocols, if you do go in and look at your tune analytics board, that's it. That'll be dwindling on an awful lot of platforms. So it's a very, very healthy sign. So,
Yeah.
so GLP, if I'm not mistaken, is 70% revenue share, and then you've got GMX 30.
Yeah. So the the protocols, the fund flows from the protocol are distributed between between stakers. So GLP stakers and GMX stakers receive distributions from the protocol. And yes, based on the last governance vote that was done a number of months ago, it's 70% of distributions go out to GLP liquidity providers and 30% go out to GMX token stakers. That previously actually used to be a slightly different distribution. When the protocol launched, it was 50% going to liquidity providers, 30% to stakers, and 20% going to effectively like a DAO treasury that was being used to support a floor fund. So and that's a great example of how the DAO and the community have they reviewed and said, well, what's the best way for us to direct resources of the protocol, and they decided to allocate more of that towards liquidity providers, saying that that's the best way for us to continue to grow the pool of funds available to be able to support larger and larger trading activity on the platform. So again, another great example where you'd see a lot of communities who would just say more for us, but in reality, very sensible minded community.
Well, yeah, as you just you said, you've seen liquidity being deployed as a kind of leading indicator of trading volume, so that it makes complete sense. And what's nice about this as well, I because of the kind of structure with GMX and escrow GMX, that lends itself extremely well to longevity with the protocol, but those kind of investors and people who want to be in the community for the long haul. It's not just a case of coming along to this nice shiny new protocol and trying to mercenary farm it, or kind of have all these tourists on board that just want number go up and all that kind of jazz. And you've seen an awful lot of protocols that their emissions are now they're downfalling in the market, and they're scrambling, they're trying to fix these tokenomics. It was a great customer acquisition cost in the beginning, but it doesn't necessarily work when the market's very choppy or it's in the red. So with the escrow GMX as well, I think that's a really, really brilliant way to kind of it kind of wraps up the community's stance and kind of the ethos and things really, really well as well. They're not just in there for short-term tourism gains and all that. So I think that really ties in really, really well. So with the escrow GMX, if I'm not mistaken, that if you deposit that will effectively vest at a rate of 1/365. So you're effectively getting 365th every single day back into GMX. So it's a slow vest. Is that right off the top of my head?
Well, so there's two options. I mean, in many ways, ESGMX has all the same rights and privileges of GMX in the sense that it allows you to you're able to stake ESGMX just the way that you would stake GMX. You're able to participate in governance, which is obviously one of the biggest use cases for GMX, by just holding ESGMX, because you earned those ESGMX are escrowed, but they are earned. But the one thing is that they're not liquid. And yes, if you want to make them liquid, then yes, you can put them into vesting, and during that period of vesting, you're able to block by block over 365 days entirely vest them out. But to do that, you also need to secure that ESGMX by the way that you earned it. So if you earned it by providing liquidity, you need to secure it by liquidity or secure it by GMX tokens, something that has contributed to the platform on an ongoing basis. And you're right, it's definitely reduced the amount of tourists, to use the term, I think that's correct, who tend to come through on a very short-term basis into the protocol. I can say that I speak to a lot of people. There's a lot of people who probably even came to GMX as a tourist and they've stayed because I think if you think about being in the business of providing liquidity, it is not about just one day or 1 week. It is about returns over a longer period of time. And I think people have been very comfortable knowing that the capital that's coming into GMX is patient capital. And and I think people kind of take certain comfort in having like-minded investors there, and that's it's definitely been something that we're very happy about, and we're just glad that as the community sort of worked through the different components, it's kind of it came together in the right way.
Yeah. So where tourists came in, now they're on the complete staycation at the GMX ecosystem. I don't think you'll have seen this, but let me see if I can find it. So we created this was a community document that I released, and what I was getting at earlier was the whole issue with liquidity mining, in the sense with these pool 2 farms and decentralized exchanges and other protocols that are set up in this way, is landed themselves in very kind of murky waters now. So the idea that the whole patient capital thing, the anti-terrorism thing, it works in the long run. Slow and steady is going to win. We're slowly starting to see that. Everyone, as soon as kind of shit hit the fan, to put it as bluntly as possible, everyone scrambled to look for this kind of real yield. Whereas protocol activity actually generating a profit for me. So what was interesting, aside from that, was when the community kind of filled this complete spreadsheet in. So what we were looking at, this just as a brief high-level overview, was what was the market cap at all-time high, and what was the price at all-time high, and what was the supply at that time.
Okay.
Then, however far along we are now, what is the circulating supply? So how much in price terms would the market cap have to get up to return to all-time high? So it's effectively how much dilution has came into the system.
Mm-hmm.
So people who've held, I don't know, if we let's use I don't know. I'm trying to think of a good. Let's use AVAX for example. Not shit on AVAX because I really like it. But if someone's bought AVAX at all-time high, $144, 30 billion market cap, circulating supply was 207,000. 207,000 at that time. Now the circulating supply is 283,000. So to get the price point to return to its previous all-time high, market cap's obviously going to have to be a lot higher than that. So everyone filled that in and kind of showed the effect of dilution, like excessive dilution on projects and how that worked out. But what we also found was GMX was effectively the lowest from a price point perspective and a return to all-time high that we found out of all the tokens on there. So it was effectively a 51% drawdown, while the rest of the market was at 91, 93, 95%. And as soon as I seen that, I was like, shit, these guys have actually, they might not have had like extreme explosive growth, but in the long term, slow and steady, as we were saying, non-tourist kind of patient capital, they've outperformed the rest of the market. And that might be from a speculative point of view, that might be from a selfish point of view, because we know we have a lot of investors that are in this space looking for best returns on their money and things like that. And obviously protocols don't like to speak about this stuff. But every single project on this list, GMX blew out the water by quite some way as well.
So I think the example I'll give is that, and it's I really don't like doing price speculation, but I'll just put it this way. I think that, within the last month or two, there has been a lot more focus on, what protocols are actually generating fees, are generating actual income, are doing something based on the actual activity that they need to do. To be fair, most protocols, and there's nothing wrong, are today not at a stage where they're generating that because they're very early in the space. So I'll use an example. If you look at an L1 and you say, well, they're not generating a lot of fees today. Well, if you look at what an L1 is hoping to achieve, they're today at only a fraction of what their eventual goals are. And so the fees today are not very large. I can understand that. I'm not expecting that you should be able to apply, multiples today for some of them. And for a lot of protocols, there wasn't anything for them to multiply. I think GMX, as I said, we've always been very transparent and really tried to share the stats. And what that's done is it led a lot of people to look at those numbers. And accordingly, based on whatever metrics they decided, they were able to maybe see something today that was not otherwise visible while things were a lot more noisy in the market. And I think that's been something that we've been able to draw some attention from. And in some ways, during the prior period, maybe people were comparing us against, metrics that were just entirely different and that probably weren't even, maybe the right comparison. People were actually, I think GMX was a protocol that from day one was being viewed based on its current activity as opposed to what future activity it could deliver. And even now, I think to some extent that's the case. And this is without me being boastful about all the things we're hoping to do and we're working on. I think there's a lot of protocols that are being viewed based on their future utility and not their current utility. And I think GMX is somehow more valued based on its current because people can already see what's being delivered. And
that makes an awful lot of sense. Yeah,
that's great. But yeah. So I mean, I'll use that example. I mean, I'm not sure I'll make the example because somebody else say we're comparing, but I think it's like an example, but I'll use an example of what, where BNB fits within the Binance ecosystem, right? There's so much future utility, but a lot of people just look at, what's immediately happening in terms of, burns and anything else that they're doing. And in some ways not even valuing all the other things that will happen.
Yeah, that's a great example. So there's obviously been kind of, not to get too much into it, there's obviously been talks of new development. Is there anything we can talk about there, or is it something that we want to just wait until it's completely out in the open?
No, so we've given recent updates. I mean, we gave a few months ago a medium that sort of highlighted two directions of development that contributors sort of focused and thought might be the way to go. One was termed X4, which was a new AMM more centered around protocol needs. It's something that we could see being another building block for us within things that we were doing in DeFi, but we could also see where other protocols, both for managing the life cycle of the liquidity, but also managing vaults and other tools, could find as a useful tool. The other one, has gone through a few iterations of name. It was called PvP, Synths. It's effectively a successor to what GMX is doing in the sense of, really trying to introduce a lot more mechanisms that we've observed. And to be fair, we've seen other protocols working on different ideas. We've seen things that we were working on, but we weren't able to fully implement within GMX when we launched it. And today, there's more and more Oracle-based data available that better enables us to be able to deal with additional assets that we weren't comfortable dealing with previously, being able to do so with strategies that will allow us to both maintain potentially some of the aspects of GLP that have been really well adored within the DeFi community, but also expanding the potential offerings that GMX as a platform has. So we've based on community feedback, and I don't even know if we went to a final formal vote, but basically it was overwhelmingly people wanted the focus to be continuing development on the GMX perpetuals and synthetic side. So that's kind of actually where the team has been really focused. I would say we're spending equal amounts of time on just on operational security, improvements on the main protocol, decentralization, things like, further decentralizing the front end, further decentralizing, anything that isn't automated, further automating it. In the end, building a platform like this is a work in progress. So it's, we every day it's, how can we further achieve that goal of a permissionless, controlless environment? And we continue to move in that direction. And then more than the hours in the day, I think, going towards working on this new platform, which we're hopeful that we'll start to get more updates in the coming weeks. And I think, it's something that we're aiming to ship in the fourth quarter of this year. I won't be more specific than that because, one of the things that we've already seen is that as we start, there's a lot of ambitious ideas. We're just seeing, how many things can we combine and, while getting a product out.
Makes a lot of sense. Really look forward to seeing that come out, as I'm sure a lot of other people will. Just one kind of final question for me. How do Arbitrum and Avalanche look for kind of future use of the platform? Obviously, if we continue to scale the protocol at the rate that it is going, would this be completely down to community participation to decide if they wanted to, I don't know, just throwing ideas out there, if they wanted to go on their own subnet on Avalanche, or they wanted to scale to a higher transaction throughput chain or anything like that. Would that come down to kind of team putting out, this is what we think, what do you guys think? Everything else seems to have went that way. Would that kind of be the process of the development on other chains?
So, okay, so I think maybe let me not speak for everyone, because in the end, as you highlighted, the community is going to have to help decide a direction. But I can say that, the more we've been looking at what has been, the strengths of GMX to date, beyond our community itself, it's also been the fact that we have been present on Arbitrum and Avalanche. We've been present in public blockchains, and we've been able to be in locations where traders are present, and also where people within the DeFi community are present. And and I think one of the great appeals that we've seen for a lot of people is that if you happen to be using a mobile wallet, you can go onto Arbitrum and Avalanche, where you will already have funds sitting there. It's not like they're segregated away, and you can go and open a trade on GMX, and it's kind of the friction is greatly reduced being on those public blockchains. So I think that's an important aspect. Having said that, you mentioned subnets. You've mentioned Arbitrum has AnyTrust, their own concept as well around that. They're very interesting ideas. They have their own opportunities, and they have potentially right now their own drawbacks. We're just, we're in constant contact with both the Avalanche and Arbitrum team, and even understand what the other chains are doing, just to understand, what tooling can be made available so that we can continue to improve the trading experience for users, and create as efficient and frictionless a market, so that liquidity providers also are well compensated for being able to help create these these deep liquid markets that we have on GMX. And so I mean, we've not really spoken about it during this chat, but we really do work based on oracles. This idea that a liquidity provider doesn't have to suffer loss from price discovery the way that you do through Uniswap, where prices move by 10% and you sell a whole bunch of your liquidity on a mispriced basis. That doesn't happen on GMX, because we price everything based on a current oracle price. And and we want to be able to make sure that those feeds are as quick as possible, as fresh as possible. And yes, so things like subnets and the like could well be part of those solutions. But I think it's going to come back to, as you said, we try to be a little patient, make sure that the technology can continue to evolve, and then take guidance. I mean, I think moving to Avalanche, for example, was a decision the community took. There were many proposals. Some people were saying, let's wait for doing something on ZK. Some people said Polygon, and the Avalanche team, I think made a real great pitch to a lot of people we know within the community, and the community is the one that came back and said, no, Avalanche is the right fit. And from a technical standpoint, they were, and we've been quite happy. I mean, for us, Arbitrum gives us literally what we believe is DeFi on Ethereum, and Avalanche gives us, the fastest growing and largest, one of the largest TVL EVM compatible chains that's not Ethereum. Right. And so, for us, we kind of really enjoy that position. And it's great to be in two spots where we've been able to be relatively early on in helping to shape the DeFi ecosystem.
Completely agree. Yeah, you've the community and yourselves have picked extremely well there. So I don't want to take too much more of your time. Is there any kind of final remarks, or where can people find you guys?
Well, gmx.io, or if they go to your site, there's definitely more than enough links on some wonderful content and articles. But yeah, if you go to gmx.io, you'll be able to get all the information about the platform, and then you can go to app.gmx.io to open a trade, try to provide some liquidity. I mean, I think so. And as I think we mentioned before, we're available on Arbitrum and Avalanche.
Excellent. All right. Well, thank you very much for your time today. We'll be continuing to support GMX in every single way we physically can. They're extremely net positive for the space, and I can only look forward to seeing what comes out in Q4. So thanks again for having us. For jumping on. Sorry, you didn't have us.
Thanks so much for having us.
No problem anytime. And if anyone who's listening, please just drop a like and a subscribe. It helps the channel massively. And I'll leave a lot of the information that we talked about today in the show notes. So, yep, thanks again.